Thank you so much for joining me today, Chris. It's a pleasure to have you on board and on our podcast. So obviously we've just had our panel on stablecoins, and there was a whole discussion around the future of stablecoins and everything like that. But obviously your company BVNK is at the forefront of this and the infrastructure and what's creating this innovation. But I'd love to first take a step back and jump into more about you as an entrepreneur and founder. Could you tell me more about yourself and what actually got you inspired to start BVNK?
Yeah. So my background was originally, well, I'm originally South African, but I kind of worked at banks early on and spent most of my time on a FX spot trading desk at BNP Paribas, the French bank, doing all the weird and wonderful Samir currencies, so ZAR, half Polish zloty, all this sort of thing. And what struck me was like when you're doing FX spot, it's basically payments. You think you're doing capital markets, but it's basically payments. So I ended up like starting in payments for not really knowing that I was doing payments. And then it was also quite interesting to me that trading technology had moved forward. When I was on the desk, you'd execute a trade in the millisecond. Human traders were going away, algos were coming in. But then when the transaction tried to settle, it would take T+2. And then if you were trying to settle an exotic currency, it would take T+10. But it didn't make any sense to me at the time. So anyway, got jaded with banking, left, tried to set up a small hedge fund, well, went down the crypto rabbit hole, set up a small hedge fund in Cape Town, South Africa with my ex-business partner. And I was an early user of stablecoins because we were doing cross-exchange arbitrage. So like that original kind of trading use case, moving money between platforms quite seamlessly. And then, coming off a bank trading desk, realizing, the payments infrastructure doesn't work, and then using this new payments infrastructure effectively, got a bit obsessed with like stablecoins as applied to payments, not just like trading. And through my ex-business partner, met my co-founders, Jesse and Don, and they built some early infrastructure for a crypto platform that was serving the African market. And we used that early infrastructure to kind of, launch BVNK, and we've been building ever since. So.
Wow, amazing. And when did you start the business?
About 4 years ago, but, I think the original 6 or 7. So we've been at it for a while, but the business is in the current form the last 4 years.
Yeah, because I remember when I first ever spoke to you, you were CoinDirect at the time. What made you change the name from CoinDirect to BVNK?
Yeah, the business, so it was an interesting story. So the BVNK is actually, the V is an, upside down A, and it was going to go like turning banking upside down, and then the A was going to spin and become like currency symbols. But then we realized, regulators don't like it if your name's close to a bank, so we had to just call it BVNK. But yeah, that's kind of the story of the name. We just the business was really getting traction in the cross-border payment space, and CoinDirect was a retail-focused trading, trading platform, so very much didn't fit with what we were doing. We were using some infrastructure, so rebranded the business and been building it ever since.
Amazing. And in terms of stablecoins, so Chris, you said that the real story of stablecoins isn't about the sandwich anymore. It's about how they're actually being used. What do you think is the most exciting real-world impact of stablecoins right now?
Yeah. So we just crossed $30 billion in TPV. All of that touches a stablecoin. So, today we see large marketplaces doing cross-border payroll in stablecoins. So this is where stablecoins is landing in the customer's wallet in dollars, in digital dollars. And then, we also help businesses accept stablecoin cross-border. So they're accepting dollar payments anywhere in the world. So once, the real exciting use case we found is our payouts business is growing significantly, but when those payouts land in a stablecoin wallet, that user wants more utility. So it's kind of what we were talking about earlier, where once it lands in a stablecoin wallet, that user can earn yield on it. Better than a bank savings account. It's in dollars, and then they can start spending it with a stablecoin linked card. So it's like that whole flywheel of, hey, you can get paid in dollars, you can store in dollars, you can spend in dollars, and you can earn in dollars if you're in the global south and that sort of thing. So we find that is really unlocking significant benefit for emerging market consumers and emerging market businesses in that, for that matter.
And this is what we were speaking about earlier, that emerging markets seem to be they are much quicker to adopt stable coins than European markets, for example. Why do you think this is why would you say that this is happening, particularly in emerging markets?
So I think if anyone spent any time in the UK and you've tried to pay someone and do a bank-to-bank transfer in the UK, faster payments is instant. It works really well. It's been around for 13 years. That doesn't exist in most emerging markets. Like the payment systems are are pretty broken. They're run by, they're fragmented. Even in South Africa, bank to bank, it still takes more than a day, and we've got a pretty sophisticated financial system in South Africa. So it's really, there haven't been products to serve these guys, to serve that emerging market consumer. And generally, they skip credit cards completely. There's a whole generation of people who just never got credit cards, moved to kind of digital wallets or mobile money, specifically in Africa. So they were digitally native. They, started using, cell phones to bank. They're perennially underbanked. So crypto made a lot of sense to these people because, look, it's a way to get your hands on, and then stablecoins even more sense because it's a way to get your hand on dollars. So it's really been bottom-up demand from LATAM, Africa, Southeast Asia, starting to use these technologies and then therefore driving, merchants and the platforms that they use to actually adopt this, new payments infrastructure and technology.
Yeah, I think that's very interesting that you mentioned about cards not being widely used in those regions, because whenever you go to those, particularly in Southeast Asia, the popular payment method is QR codes. So they've essentially skipped the whole card payments and everything like that, and then gone on to innovating in blockchain and stablecoins. I think what would be good to know as well from a B2B perspective, we can also see it's creating a lot of financial inclusion. Could you give any real world examples of how you've helped companies get more inclusive in the financial sector?
Yeah, I think some of our largest PSP customers use us for a variety of different use cases. Generally, they're starting, so we've got large fiat PSPs like dLocal and Rapid, and effectively they use us to settle their merchants cross-border. Instantly after processing a fiat payment, they're doing the settlement on stablecoin, so a merchant settlement. We then find once they get used to that, and that's like a pure B2B treasury payment, they're starting to think, look, I've got a whole payouts business. I'm paying out into 80 markets around the world. I've had to stitch together all these domestic payment methods. There's demand to get paid in stablecoins. Let's add stablecoin payouts, so allowing our merchant to pay out their end consumer in stablecoins. Mm-hmm. So we've been, that's what we've done with WorldPay. We're doing that with dLocal as well soon, and and then a whole host of other kind of fintechs and PSPs that are starting to add stablecoin payouts to their stack as well. So I think it's really that it's enabling these payment companies, fintechs to actually deliver stablecoins in a compliant manner instantly, 24/7, 365, and that really creates this nice flywheel for the user to again get paid in stablecoins, store, earn, and now soon to be spend as well.
Yeah, absolutely. And I think in that respect, because it's opening more doors, more companies are having access to rails and payment methods and instant payments that they wouldn't typically have otherwise. And we were touching upon the SWIFT network earlier. Do you think that stablecoins is going to eradicate the SWIFT network, or do you think they're going to collaborate?
I think they're really kind of coexisting, I guess. SWIFT are trying to push new innovations and they are moving ahead, but I think blockchains are just fundamentally better payments technology because with the SWIFT network, the messaging layer is what SWIFT does, and then the banks are the ones that actually move value through the correspondent banking system. With a blockchain, the messaging layer and the value layer are in the same transaction. So that's a fundamental upgrade to how money moves around the world, even digital money. Like the ones and zeros that banks are updating in their ledgers, and it's just a matter of time where better payments technology. We've seen that over and over through kind of tech cycles. Is better technology will just eventually get adopted, and I think you're starting to see a lot of that accelerating adoption now. So I think SWIFT's no longer going to be the only game in town to connect these domestic markets together for a cross-border payment, and blockchains are starting to shine to do that. So I think they coexist, but I think SWIFT are acutely watching to see if they can be replaced.
Yeah, absolutely. SWIFT better watch out, huh?
For sure.
And how much, if we could give an example, because obviously the SWIFT network can be very costly. It can also take 3 to 5 days if you're sending it to an emerging market. And the FX fee as well, you're looking at 2 to 5% charge through a bank. In terms of if someone was to use your services, for example, or use the stablecoin or blockchain, how much can they be saving, and how quick can the payments be sent?
I think consumers and businesses alike care about 3 things when they do any sort of cross-border payment. One is speed, cost, and transparency/reliability. That's like, do I know where the payment is? Does it get stuck in the pipes? On that transparency. So blockchains win out on that every time. On On the speed front, they win out every time as well. Like, it costs a few cents if the actual infrastructure fee to move the money instantly is, a couple of cents on some of the low fee, high performant blockchains. On the cost front, it is quite corridor dependent. As more liquidity comes into the market, as more transactions are being done, you are being way more cost competitive for some of the major corridors. But in certain emerging market corridors like Philippines, you can move money, faster and 2 to 3 or 4x cheaper than traditional kind of payments. But it can be quite corridor specific today, and I think that's still a bit of a misconception that it's just cheaper by default. It's not necessarily. You still need liquidity in those markets. The infrastructure is for sure cheaper, but I think we're getting there on the cost.
Amazing, amazing. And I want to take this back again on your journey as an entrepreneur and founder. I love to dive in deep on founders' journeys and what actually makes the company. So could you tell me more about your day-to-day? Like, what do you like to do? What are your hobbies? And yeah, tell me more about yourself.
There's no hobbies. It's just work. No, I'm joking. No, I think, I grew up in South Africa, so spend a lot of time outdoors. I like to do downhill mountain biking and spend my time doing things that get the heart pumping. But I do travel a lot. We've been building a business in a really cool space that's accelerating. So, we spend a lot of time with the team, and that's why I think, you have to enjoy working with your colleagues, and you have to be, get people on the same mission, which is really our mission, is to accelerate the global movement of money, and we're all bought in to do that. So, it takes a lion's share of my time, and then I've got my wife and my baby boy at home.
Oh, amazing. I love that. I love that. And in terms of to become an entrepreneur, what do you think are the biggest skill sets that you need, and how important would you say mindset is as well?
I mean, it's, resilient. I mean, all the things that you've seen, but for me, the number one trait is curiosity. So you need to be relentlessly curious about how things work, why things are a certain way, and then ask, why at every, and that's really how you unearth opportunities and things where you can actually make a difference. And one of our operating principles is being relentlessly resourceful. And I think that is probably the two words that encapsulates entrepreneurship more than anything else is, you just have to find a way. And those two things is it's, find a way to do more, more with less, or find a new opportunity, or, just being relentlessly resourceful, which also encapsulates that kind of grit and determination. So I think, it's one of our calling cards at BVNK.
Lovely. So that's a big value, relentlessly resourceful. I love that. That's cool. And if you could go back to someone and give them a piece of advice, if they were looking to start a business in fintech or crypto or any sort of business, what advice would you give them?
Well, I mean, at the end of the day, it's really, is that curiosity, be curious. And, if you remain with that kind of like childlike curiosity, I think you can go places.
Amazing. Thank you, Chris. I like that, curious. I'm always curious as well. It's always great to learn new things, to do new things, to explore. And that's how you gain more knowledge, and that's how you grow, right?
Exactly.
Perfect. Well, thank you so much for joining the podcast and the interview today, Chris. It's been a pleasure seeing you. And thank you.
Thanks so much.